Hello and welcome to Climb's podcast series Advancing Vietnam with me, Vlad Savin, as your host. In this episode, I'm discussing with Matthew Lowry, managing partner of Climb Vietnam, about the requirements, processes, and procedures for foreign investors seeking to start a fintech business in Vietnam, looking at various applications with the ministries and as well with the State Bank of Vietnam. Matthew, welcome again to our new podcast series.
Great to be here again, Vlad, as always.
The fintech subject is quite interesting for us. We just released a fintech report looking at the entire industry and key participants in the market. And I'd like to focus this conversation specifically on the regulations for foreign investors into understanding market entry and the practicalities from a legal perspective. Companies in Vietnam, as you know, are only allowed to undertake specific activities listed within their incorporation certificates as business lines. Before looking into these and understand how they relate to international investors and their activities within fintech, can you start the conversation with the general definition of fintech from the authorities' perspective, from a legal perspective?
It's a good question to start with, because fintech means potentially different things, different people. It's a very broad topic. So in the Vietnamese context, you're looking at a financial services using a technology platform. So predominantly apps, but it's innovative use of financial technologies and how they're provided. Personal finance, lending, payment processing, insurance. It's very broad in that. But if you come down to financial, new technology and processing and how that works. So the government is quite broad in its application, but as we'll talk about in a moment, I suspect, that has its drawbacks at the same time. So broad can be many things, and so it is there's no one specific definition that the authorities have, but it's that technology platform, innovative use of technology.
Correct. And a lot of in many cases, e-commerce as well, or social media as well, can fit in within the fintech space, depending on their activities.
E-commerce has payment processing, social media has payment processing. That will draw you into that financial technology fintech space, and that's part of the debate that is often out there is, where do you get regulated? Because in that fintech space, you are regulated by the state bank. It's a payment financial element to it, and that gets drawn in. So a social media platform being regulated by the central bank is one of the issues and debates that arises in this sector in Vietnam.
All right. And speaking of regulations, let's look into some of the key fintech pillars that are regulated in Vietnam. What are the business models that investors generally undertake when they're entering the fintech market, and what are the regulations alongside these models?
So what we see is that a lot of things that we regard as fintech aren't regulated. That's the gap. So you've got regulations. Payment processing is regulated, banking, insurance is regulated, but you've got matters such as e-commerce is regulated, but you've got matters such as peer-to-peer payments. You've got platforms. You've got elements of those which are not regulated. So if I wanted to do a peer-to-peer platform, I might be regulated. If I'm doing peer-to-peer lending, I'm definitely not regulated. And that's the government has identified that. The problem is with other things such as ed tech and others, that you're living in an area of gaps. So you've got to work out what is regulated and what's not. And a lot of these things are not regulated in Vietnam. So what is regulated and where the government takes its foundation is payment. The payment process itself is where it's regulated. It may not be other parts of the back end. So that's where you start and look at it is, I'm using online payment processes. There needs to be a regulated party involved in that as part of the process.
That's right. And touching on that first key pillar within the fintech, which is e-wallets, e-payment gateways, intermediary permit services. Generally, for the investors, when they're looking at fintech in Vietnam, this is the area where their main focus is, outside some of the other niche fintech. And the authorities, together with the state bank, have certain regulations that enable investors to access this market. However, there are certain conditions and restrictions. It's not an easy endeavor. Can you elaborate what would be the market entry steps and regulations around these IPS licensing approvals and e-wallets?
So there's no WTO commitments. And Vietnam, just to step back, Vietnam's fundamental market access to foreign investors is based predominantly around the WTO accession protocols of what was agreed as open for investors and what was not mentioned and therefore not opened. So this is not mentioned as part of WTO, but there's nothing which actually excludes foreign investors, which means it's an application to the ministries. So that's one of the first bugbears in this process is foreign investors have an opaque process. There is no clear avenue. It's not that it's not permitted, it's just not mentioned in the commitments. And that presents part of the problem is market access. And you're generally looking at either one of the defined areas, so payment processing, etc., which has limitations, or you're looking at a generic tech sector, doing a tech license and building in. And it is one of those pain points, at least for foreign investors, is that there is no singular clear path. And that becomes problematic.
And specifically on the peer-to-peer lending as one of the other key pillars within the fintech, specifically on the B2B side, for example, where companies like Aspire from Singapore, others enter the market, enabling SMEs accessing funds, loans through third parties without specifically being involved with the traditional banking system. And we see a rise within these models. How are these companies, in your opinion, accessing the market in Vietnam as foreign investors?
The peer-to-peer lending actually, and the general online lending, non-bank lending, a lot of them started using pawn shop licenses, using licenses where they were allowed to do short-term lending in the community and using those as licenses. Others came into the back of international models and just did that as a technology platform. They did not regard themselves as lenders, they were just facilitating others. The authorities have come out and said, yes, we note it's happening, we will regulate it, and we're waiting on those regulations. It is covered by some of, like the sandbox provisions. There's a sandbox provisions where P2P are actually permitted to be part of that, but they're not regulated as far as a specific license from the government. So again, it's one of those grey areas, and people are needing to either take a structural risk or push the boundaries, as many things in the tech world does. And this is not alone. We go back to the Ubers and the Grabs of the world where they were pushing forward in Vietnam an unregulated space, and eventually their regulation followed. And that's where P2P is happening. I don't know if the government's completely comfortable with that, and blockchain and Bitcoin, etc. There's a lot of things regulatory that is more complicated, and that's one of those that exists.
Within the regulation space, specifically for fintech in Vietnam, there's at least 4 or 5 public key stakeholders that are involved into approval process. That includes the Ministry of Finance, it includes the Department of Planning and Investment, but one of them, and probably the most important, is the State Bank of Vietnam, as you mentioned before. They issue the intermediary payment license for investors into Vietnam. As well, they put in place this sandbox that maybe you can share a few details on.
So it was in June 2020, the sandbox came out, and that's part of the regulatory environment of how do the authorities control and put in place a system for assessment and a measurement of how it works. So the sandbox regulations are started at the State Bank. So the State Bank, as you said, regulates intermediate payments, bank licenses, digital wallets, etc. So they're the ones that do that. That sandbox has a few rules. They updated it, was mid-2022. There's an update of that. So we're still in a draft process, but essentially, if someone enters that sandbox, once they agree to enter, they have to enter it, or they're in trouble. That they actually, once they've agreed, you're in for that 2-year period. Otherwise, you could be in, you could lose your operating license. And the commitment is generally be a 2-year process whereby you effectively prove proof of concept, show that you are your systems and your back end, your front end works as advertised, and that the authorities are satisfied to let you go at large. So the sandbox is basically just containing you within a set of regulations so that you can prove that you're appropriate for the market. It's one way in theory to allow a much broader sense of entrance without focusing on the licensing element. It's more of, okay, the licensing is one side, but let's just put it in a controlled environment so that you can access market and do what you say you're going to deliver. Problem is, there's not that many have actually entered it. It's been relatively light in applicants, a few banking, etc. But most of those, it's trying to attract the P2Ps and P2P lending and those sort of ones who actually are probably best suited to be contained in that environment. We're not seeing a lot of take
because of the risk component as well within these sectors.
You've got to open yourself up, and if you open yourself up, maybe you will break some sort of regulation there'll be something there to you to cause a trouble with. So yeah, it's there, it's good, but we're going to see more refinement into the future.
And how do investors generally proceed with the application to apply for this draft? Is it something straightforward? because it is just a draft. Now, I believe this year we have the second draft before the full implementation of the program. So it is still an area that is unclear for investors.
It's a negotiation. It's a negotiation. And that's a lot, even with payment processing licenses, there is a negotiation process. And that's part of the problem, is that because only some of these are regulated as business lines and some of them has foreign investment approval, there is no, a lot of things in Vietnam are checklist driven. Checklist, lodge applications, 15 days, you've got your process. That's not the case in here. So there is guidelines, but at the same time, it's a draft. They're guideline light, and it is an unknown for many when they start this journey. Some do have a relatively short path, but my advice is it's on a case by case. You need to sit down with the authorities and understand how they're going to assess your application as an individual process.
And looking at the license for payment processing, in the last couple of years, we have seen very little international investors that actually access this license as a full foreign invested enterprise. And maybe you have some thoughts into why do you think this is happening, and why is the state bank so stringent with allowing international investors to access the market, especially considering that Vietnam, looking regionally, is underrepresented from this fintech innovation perspective.
And I understand in many ways, if I go back many years back, 2007, 2008, there were so many banking licenses issued to grow the market. Then the authorities are going, oh, hang on, we've done way too many licenses. It's hard to regulate. And they've spent many years since then bringing these license numbers back down. If you looked at the mobile wallets, again, there was a plethora of those, 50 something plus, and there's only 5 or 6 that really dominate the market. Again, a lot of wallets that there, and so we've seen the authorities more reluctant to issue licenses as a general rule, not just foreign investors. They more reluctant to issue licenses. They don't want to get to the position where there's too many and they're uncontrolled and the market's out of control. Now, from an application on the paper, you must have a presence in Vietnam. You must have an entity. You must have 50 billion dong paid up capital, so $2.5 million effectively. You've got to have a person in charge who's got the relevant experience and qualifications. So you've got to have that entity, and that's part of it. Is if I'm not a bank, am I really going to put in that as a third-party service provider? I'm really going to have that capital. How am I really a credit provider? It's a tough one. So there's a number of factors in there. What we see most do is partner with, and what the authorities appear to be wanting is that participants partner with an existing provider with that license. So if I'm going to start a fintech business, I'll actually find someone else with that payment processing license or wallet or similar like that, or a bank as my partner, and work through that instead of me applying for everything I need up front. That's what we see in practice.
That's right. And while we were doing our research on the fintech report that we just issued, we actually discovered that the majority of local banks first, but international as well in Vietnam, they are all in 100% into evolving and partnering with fintechs. If there's a fintech coming in and they have a strong position outside, all the local banks will be interested in partnering with that fintech. So it's interesting to see that the traditional system of the traditional financial system is seeking to integrate with these innovation models.
And that makes sense. So the virtual bank that we've seen in most of the countries, we haven't seen, there are a handful in Vietnam, but they're not, they don't dominate like they do in other markets. And the Vietnamese traditional banks understand that. They want to be on the next wave. They want to be part of that. They know that this is where it's moving. So you're seeing some banks with innovative credit card products. You're seeing a lot of wallets. You see integration, your Samsung Pay, Apple Pay, and everything else. You're seeing this, and it is an opportunity and the banks are very open for opportunities, and because that's what's going to happen next. But there's no dominant players in the neobank, the sort of the virtual bank market yet in Vietnam, and it doesn't dominate the market, and be interesting what comes of that.
Right. And you mentioned Apple Pay. How do you see I think only 1.5 months Apple Pay entered the market in Vietnam. Do you see this as a signal for the authorities to open up more the fintech ecosystem to international giants as these, and potentially enable them to strive in the market and ensure that they can offer quality services instead of the smaller startup fintechs?
I don't see that as indicated. Samsung Pay's been here 5 or 6 years, and Tap to Pay, they're both just phone-based Tap to Pay. So I don't think that by itself is any change to the strategy. What I see is that the limitations of QR code based transfers is apparent. Now, one of the big scams at the moment I heard in the press the other day was people putting new stickers on the old stickers and taking money through QR codes. So the wallet using QR codes has been the staple of the growth of the fintech in Vietnam from a payment processing perspective. That's been fantastic. What's next in that? So I think it's more of a greater of facilitating. So NAPAS is having a system whereby direct payments that bypass banks effectively completely. That next step of how do you move forward and do direct payments, bank-to-bank payments without going through a banking system. Some of the banks now, I can go to an ATM without a card. I can just have my phone and I can withdraw money at an ATM. That, I think there's a lot more in there. Apple Pay is going to, I think, have a significant impact on the market, but I don't think it's indicative of any change itself. What it will do is push the focus away a little bit further from QR cards back to tap to pay, which has an extra layer of security, in my opinion.
And since you mentioned the next level of innovation coming in, can you touch for a couple of minutes on the crypto space, blockchain space, innovation around this area, and how does it fit within the Vietnam regulatory system?
Surprisingly, it's one of the hardest questions, which is given that Vietnam, I think I read, was the fourth biggest adopter of blockchain cryptocurrency. As a very, in a broad sense, measured, Vietnam is sort of fourth in the world as far as the adoption. So cryptocurrency, Bitcoin, for example, is not recognized as an asset or a currency in Vietnam. So it can't be used for payments and it can't be deemed an asset. That doesn't take away from the fact that it is used extensively by a small segment of the market, but it's used very extensively, and development and the systems behind it, so the infrastructure and using it within fintech apps and the fintech environment is a very big take up. And that's the problem, is that you can't be regulated as a fintech or a company as a crypto company. You can't have a Bitcoin or cryptocurrency as part of your business model. It's not regulated, it's not permitted. Part of that is, if it becomes an asset, it's got to be taxed, and then it's a currency, you've got to allow it, then the Vietnam dong is actually controlled as a currency. Authorities don't know the answer. And the one problem with that, just as an aside, is that because it's not regarded as an asset, if someone steals your crypto in Vietnam, how do you pursue them in the courts if it's not an asset? There's been cases both sides, but it's an interesting argument. So it's again, I think it's indicative of Vietnam, of development, where Vietnam often waits for something to mature and then will regulate it, back to the Uber and the Grabs, etc. And I think we're in that space where Vietnam's very much ahead of the curve as far as a society, but the regulation will follow in the future.
And to round up the conversation, what would be a general recommended approach for international investors entering the market within the fintech space in a broad area, as in what would be those key steps, not specifically on the licensing perspective, but more from a strategy and structure perspective?
Actually, we'll take the licensing as the starting point for the strategy, is that come in as a tech company. Tech is regulated, unrestricted, regulated as in WTO commitment, foreign investors. It's an easy path. There's no additional licenses or anything. You can enter. That gives you an entity. It gives you ability to employ, develop people, develop your apps, enter the space, and enter into commercial relationships with others. So if you are trying to work out how to do things, you're going to need that local entity, whether it's going to have a payment processing license or an intermediary payments regulations by itself, if it's going to partner with a bank, if it's going to be providing something unique and therefore it's in an unregulated space, you need the entity to do that. So having that entity and then having those commercial relationships, building the model out on that sort of intent is what you're going to need to do. You're never going to be able to come in and apply for everything you want on day one and sit there for 2 years negotiating with the authorities, because you'll have nothing in 2 years. You might have an approval, but you spent 2 years with nothing. You're better off having something and moving forward and pushing the envelope maybe. Because, as I said, there's unregulated areas or areas that can't fit into the Vietnamese model just yet, but that doesn't stop others from doing it moving forward. But you need to be based and have an entity here to do that.
And from a licensing perspective, post-establishment, investors should also have an understanding of the practical timeline that really exists within this sector. So
yeah, for their specific areas, they really must have a clarity of expectation that it's not going to be 3 weeks later. It's going to be a longer period if there's a specific license they want.
Some of the examples I've heard in the market for fully foreign invested companies headquartered in Singapore was 1 to 3 years, for example, for some of these very specific licenses.
For payment services licenses, an online bank style permission. Yeah, I would say 3 years is definitely sort of not out of the ordinary. And it depends on if you have already got a licensed business providing consumer credit. Doing an app that actually takes that to the next level may not take as long, but it's still going to take a while. But if you're a new entrant to market, yeah, it can be measured in years, definitely.
Mm-hmm. Matthew, thank you again for participating in this podcast. Interesting topic specifically related to our industry report, which I invite everyone to download on our website and check it out.
Fantastic, Vlad. Great to talk. Great topic.
International investors active in the fintech sector should monitor the developments within the regulatory digital transformation framework in Vietnam and be aware of the above prerequisites for market entry, conditions, provisions before sending out a long-term investment strategy in country. And many thanks to you, our listeners, for tuning in to Advancing Vietnam podcast series. For more information about this topic, please check out our publications on vietnam.acline.com. And if you want to reach out to us for any additional details, feel free to contact me on LinkedIn or throughout the website contact details.